Good afternoon. This is Larry Tentarelli with today's edition of Your Daily 5 for Stockcharts.com. I'm going to share with you 5 stock charts that are very high on my screen right now. So we'll get started with a brief introduction. My website is bluechipdaily.com. You can find me on Twitter. My call sign is at LMT. 978. So we've got 5 diversified charts of interest today, and we're going to get started with what's probably the most important chart, which is the S&P 500, because as we know, most stocks will follow the index. So not all, there's always outliers, but for the most part, when the index is pulling back sharply or when it's rallying sharply like it is today, a lot of stocks will tend to follow suit. So we're going to start with the S&P 500 ETF SPY. So I've got a new position in here started yesterday. And here's what I see on this chart. And it really relates to the S&P 500 as well. So S&P, and you can look at my, follow my cursor here, but SPY tried to break out going into the Fed's Jackson Hole meeting, which was August the 26th. S&P looked like it might be setting up for a test higher, a little bit of a pullback from the 200-day moving average. That's really not uncommon whatsoever. Had a couple nice days to the upside, and then it looked like SPY wanted to possibly fill this gap. We know how that went. Jerome Powell came out in Jackson Hole. He basically made some comments that the markets didn't like, and we had a very, very sharp drawdown in the S&P. So about an 8-day drawdown, but 2 constructive things that I saw, and I shared this with my website members. So the first thing was last Thursday, there was a nice reversal in the S&P. So we had straight down 1, 2, 3, 4 days. Then we had a nice reversal in the S&P. So that was good to see. So that was the first checkpoint, was the intraday reversal. But then there was some difficulty Friday, sharp drawdown. But here's the key. On Wednesday, this was the first really constructive day where the S&P 500 held 3,900. SPY held 390 on a closing basis, and we saw a nice move to the upside. So that was the sign to me that it was time to at least start a position in SPY after this pullback. So we started a position yesterday. The close over 400, that was a good sign. And then today we've got back over the 50-day, looks like back over the 100-day. And as I look on the screen right now, the S&P is trading at 4,061. So key levels for me, 390 is really the hard line in the sand. And on a closing basis, if it can stay over 400, that would be great. And then a close today over that 50-day moving average at 402, that would be a very constructive signal. Now, I will say this. We've got CPI on Tuesday. We've got the FOMC the following Wednesday, but the market sold off pretty sharply. So I think we've got a pretty constructive bounce that's underway right now. So Snowflake in technology, large cap tech, I don't have a position here yet. This is the highest ranked software chart that's on my screen right now. So a couple things that are working for Snowflake. We can see it's got a very basic textbook uptrend, longer term underway. So it's got a series of mostly higher highs. If we touch on the high points, we've got higher and we've got higher. It's got a series of mostly higher lows. It held this rising 50-day moving average right before earnings. It held right at the 50-day, big bounce after earnings. Then it had a sharp pullback with the overall markets. It filled most of this earnings gap, maybe missed it by $1 or $2. But what I like about the chart is 2 things. Number one, it held over the rising 50-day moving average again on this pullback. And then number 2, it's holding the rising 20-day. So the key things that I like to see is higher highs, higher lows, rising moving averages. And we just took a look at the index. The S&P went well below the moving averages. Triple Q went well below the moving averages, but Snowflake trending higher. And I like the way that that chart is set up right where it is. Chart number 2, Tesla. So I've got a position in Tesla. I've had this position for a little while now before this recent breakout. So if we think of the mega cap tech and the NASDAQ 100 leaders, Apple, Microsoft, Amazon, Google, NVIDIA, Tesla right now is the only one that's over the 200-day moving average. So that's a constructive sign. Apple is a little bit below, but also a key thing about Tesla that's constructive, it did hold this rising 50-day moving average on the recent pullback. So Tesla was starting to break out before markets turned down, pulled back with the market, but very nice move off the 50-day moving average and then over the 200-day moving average. So we can see it's had some nice upside volume coming in this week. The last I looked, Tesla was up about 9% for the week. So it's good to see this relative strength back over the 200-day, even though we've got triple Q down near the lower end of the page. We've got SPY a little bit towards the lower end of the page. So Tesla, nice breakout after earnings. It held that 300 level for a while, pulled back to the 50-day, and coming right over this 200-day moving average. That can often be used as a buy signal, but showing a lot of relative strength. So it's good to see that. The next chart, because I don't want to stay just in tech, I do focus. There's 11 S&P sectors, and I really focus on 8 or 9. So the materials sector is a key group. It's a key sector that I focus on. So I don't have a position here right now. We recently took profits in Mosaic, but CF Industries is my highest ranked chart in the materials sector. $20 billion market cap. It's got a little bit of a dividend yield. So they are in the fertilizer and agricultural input space. And if we take a look at the chart, it's got a classic breakout and pullback. So it was in a longer term uptrend. They took it down once the markets corrected through the summertime, all the way to the 200-day moving average, pretty much a straight shot up to 120. Then it pulled back. So 119 and change, it pulled back and held exactly at $100. So 100 is a key support level that's on this chart. Also, it's got a rising 50-day moving average. It's got a rising 200-day moving average, and just below the 20-day right now. So the chart is set up well right where it is. I would like to see it get back over 108 in the near term. And then if there was any further pullback, I'd want to see it hold over this rising 50-day moving average. So I don't have a position in CF as of yet, but this is one of the highest ranked charts on my screen really in any sector. And then we'll take a look at the last chart, which is XLE, the energy sector ETF. And XLE and the energy sector, this is a chart that we've looked at as I've been doing these videos with Stockcharts.com for over a year now. So I've got a couple positions in the energy sector, and this has been one of my favorite sectors over the past few years. But XLE right now over the rising 200-day, over the rising 50-day, just below the 20-day for right now. So the energy sector can be very choppy, along with crude oil. Crude oil's had a pretty sharp drawdown, but the energy sector has held up significantly better in the pullback than crude oil has overall. So rising 200-day, rising 50-day, looks like maybe about a 10% or so pullback here, but overall just a nice, steady, longer-term uptrend and over rising moving averages. So that's it for today's Your Daily 5. I appreciate everyone's time, and I hope you enjoyed the video.
Hey guys, Dave Keller here with Stockcharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.